Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Greetings everybody guys, let's take a look at Bitcoin market as usual on Mondays. So there's something to talk about today because our stuff that we discussed in last week is completed. So market has hit 88 area and completes the minimal target of our pattern on intraday charts, the ABCD. Now we need to decide what to do next. So on a weekly chart we do not have a lot of changes because recent 2 weeks, well, very small compares to the even previous action and mostly stands inside of the same consolidation. Theoretically we keep our ABCD pattern just because this top hasn't created the new extreme point and keeps C point valid, and that makes valid overall ABCD pattern as well. CD like here was 2 times faster than AB. It shows deeper upward reaction, but if we suggest, well, relatively fast drop here, it seems that it will be right in time compared to the timing of the AB and CD terms right at the OP and the 33. Currently it looks unbelievable and maybe it will not happen because on daily chart we'll see some downside reaction that we actually talked about, but it's not currently, well, it's not the strategy and not really very some miserable plunge. So this is some downward action exists, but nothing serious yet. The one thing that also we could mention here on the weekly chart is starting of the miners capitulation. So this indicates the 2 averages of the hash rate, and they are crossing. Something like the you may see the indicator when they are crossing. It shows that the hash rate starts to drop and shows miner capitulation. Not always it leads to reversal, but it's negatively impact on the price performance. It would be better seen on the daily chart. So let's take a look at the daily chart. You could see what has happened here on the first minor capitulation. We do not have some problems, but take a look. Market here is slowed down and stands mostly in some kind of the consolidation or trying to tending higher. Currently, again, right from this point, you can see the capitulation starts and market shows the pullback. On the daily chart, guys, trend stands bearish. In a few sessions, today, tomorrow, we expect some pullback here, short term. And later we will see what will happen because our major support area stands at the 80 even area. It's confidence support in the daily chart. Do not forget that actually here we have the garter steeple to sell pattern. So you probably already saw it because we have traded it. This is equal ABCD garter steeple to sell. And after this pattern, the minimum target of this pattern is 30% retracement. That's right to the 80 even. Retracement right here doesn't mean that the bullish trend is over. It's just normal reaction on the target. So I would not think that this market will show the 30% pullback. It means that everything has lost and turning down and it will be drop right at 33 target. Not necessary. It will be just normal reaction on the pattern that we have in place. And it's not fact yet that market will reach it. But if market will break the confidence, that will mean something. That will be really important because this is very strong level. And that really could indicate the change in the sentiment on the market. But this, as you can see, is still long run to this target. We need to understand what's going on right now and what will happen next. So on the 4-hour time frame chart, you could see that market has completed our OP target. Started precisely with our garter steeple to sell right at 618 resistance. From a technical point of view, that was just perfect setup. There's no flaws in this overall construction of the price action. Clear ABC retracement right to the 618 resistance of whole downward action. Starting downward continuation, as a result, we've got A, B, C top. OP target is done precisely at the daily 30% support in 89. That's great in agreement. That's why we will think that currently we will get the pullback. Some reaction, some retracement here should happen. If downward action will continue, then XLP of our ABCD pattern that actually based on the daily engulfing, so why we are trading in general this ABCD we said we'll have engulfing, usually takes the shape of the ABCD on the intraday charts, and that has happened. Now, the same ABCD pattern has the XLP, so 81.45, that agrees, well, just $100 difference, agrees with the daily confluence. So actually, it stands in agreement with the 30% support on the daily chart right here. It's around 79.70, well, 80 even area. That will be an XOP. But currently, we need to understand whether this market really will go to the XOP or not. For that purpose, we need to keep an eye on the pullback that will happen here. This first moment. Second, while this pullback will stand in progress, we need to keep an eye on the possible bullish patterns. Appearing of the bullish pattern tells us that, well, it will be more chances to some stronger upward action, maybe even challenging of the 1050 area. No bearish or bullish reversal pattern suggests that we will get some pullback and then market could continue down. Better to explain on the hourly chart. Take a look. Here we have the different levels. It's not very comfortable to draw the levels on the trading view, guys, but I will try to just show you what we have. So here's we have the first confluence resistance. It's formed from this reaction point and that reaction point. So in this crossing of the 618 and 30% resistance, it's approximately around 93. First confluence resistance. It's very probable destination of the retracement. Within all other terms stands equal, this level probably will be reached. Yes, we have here as minor level as well. It's 91.46, but well, I suggest that confluence could be reached. That's the first level of the resistance. Second confluence resistance we have around 95. Is two different levels. Again, 618 from this top to this bottom, and 30% from all action from right from the top, from this top to this bottom. It's 30% pullback. That's the major level to consider. Here's most probable some attempt to move lower will happen, because market, well, it should have extreme power to break two confluence resistance at once. If this will happen, the market will just skyrocket to the upside, so there are no doubts that we are going back to the 1050 area. But I suppose that it's more probable that it will be reaction as on this level as on that level. And on that level, the reaction could be deeper. Here, we need to consider possible reverse head and shoulders pattern, because here, as you see on the 4 time frame chart, we have the butterfly. And butterfly very often becomes the part of the hand shoulders. If with the starting dropping right back down, market will stop somehow around 90.75 and starts moving up again, that could indicate that we are getting the hand and shoulders. In this case, be prepared to return back to the 10 even, and that also could be the reason why market could just reverse up and challenge the 1050 top. So that's the pattern that I'm talking about. If we will get the hand and shoulders here, be prepared to more extended upward action, and you could keep an eye on possible taking long position based on this pattern around 90.75 area, right at the bottom of the right shoulder. That's what for the bulls. If no pattern will be formed, market, for example, will hit confluence and start dropping right back down, taking out of these lows, it will mean that we are going to an 80 even area. So currently, we do not have any bullish context, and bulls should sit on the hands and wait for either reversal pattern here, or when the market will hit the confluence support. If, of course, you do not want to take the scalp long position, here is agreement, guys, on the daily chart, and here will be some bounce. If you're trading on so small trading time frames, you could drop more to the 15-minute chart or even 5-minute chart, watch for a bullish reversal pattern here. This will be maybe Gartner steeple to buy or something of that sort, and you could catch the pullback up right from the lows. But this is too small time frame. When this video will be uploaded, I suppose that this setup is already will be done. That's why we do not take a look usually at this so fast trading setups. I am speaking on the 4 time frame chart, on the hourly chart. So from that standpoint, bulls have to wait either for the reversal pattern, as I said, or when the market will hit XOP and confidence support at 80 even. Here probably will be some bounce. That will be the point where bulls could consider taking the long position. For the bears, it's a different story and more chance to trade. First of all, you could consider taking the first position. I suppose it would be better to split your position in parts. Consider first taking the short position right at the first confluence with the stops above the second confluence. If market turn down and start dropping, no hand shoulders will be formed. This will be great because you are going to the 81.45 XOP target. If market will proceed high and reach the second confluence, you could add more to your position, getting the good average price with the stops again above the second confluence. Here's very big chance exists that market will show the pullback. If even this will not be the hand and shoulders, but significant pullback here could happen. That will let you move stops to the break-even. So your position will be protected by the break-even stop. Here's lost very small chance to get loss. So you probably will out with some profit or at least at the break-even. If you will get lucky, you will get the short trade right to the right shoulder. Here's you easily move stops to the break-even and see what will happen here. Returning right back up, you could book your profit. If market will start dropping low, taking out of the head, and if hand shoulder starts to fail, that's better to you again, stands in the road to the 81.45. As you can see, a bit sophisticated chain sequence of the different setups, but all of them are not very difficult. They're just few of them, but they have relation to each other and some link between each other, and it's not really difficult to combine them. So that's our view on Bitcoin market. Today, this will be probably pullback, at least to the 83 support area. Overall context still stands bearish on the market. That's why we do not consider taking a long position here. But what the shape of the pullback will be, we will see, and of course we'll keep an eye on updates, in our regular updates, to keep an eye on the overall situation in the Bitcoin market.